Welcome back to another video, guys. This is about how we're going to read the market on the high time frame. I know we're not used to using the yearly, the quarterly, the monthly cycles. We're not used to seeing this high time frame play out intraday, but when we look at our higher time frame, let's look at the weekly chart. If we're looking on the yearly quarters, you can see that we are just transitioning. July 13th, and the previous week was our new weekly candle in the first quarter of our accumulation, manipulation, distribution. So distribution is happening for the year. We are right now in the midst of it. And so what I'm going to show you is how we can see this happen and how I saw the market shorting. And I have my drawn liquidity for the quarter, drawn liquidity for discount of the year. This is my drawn liquidity, same as ES. We have right here this minor sweep, which I refer to as my drawn liquidity. And I want to show you a little bit about how the next or the previous month will show you the transition to the next cycle. So we're looking at the 4-hour chart, and I can even show you the 6-hour. In our previous video, when we were talking about higher time frames, I mentioned this monthly cycle. And because this monthly cycle is of extreme importance, it is the first in our new quarter. It's really just like happened right after True Month Open, monthly cycle. We started getting major crack correlations on the higher time frame. We had the monthly, we had doubling weekly cycle, and then True Month Open showed us that anything above there was our high time frame manipulation. It wasn't as obvious because we were in a range, so what do we have to do? We had to wait. Waiting game is the only game that we're playing, really. So right here, we can see the month of July, our quarters. What do we have here? Accumulation, manipulation, right here. Monthly cycle, high. What are we looking at? I'm looking for the 90-minute CISD after that. And like we said in our previous video, this breaker is where our entry was in the high time frame. If we're on the 90-minute, if we go to the 1 hour, this breaker after a monthly cycle was created on the 90-minute was the confirmation that we are moving lower. You see, we had our monthly sell side, we had our accumulation of the month sell side. Let's look on the 4-hour because we can really make this clear. Looking at the quarters and the high time frame quarters, lows and highs are going to be your drawn liquidity. Those are going to be where we're going to go to first intraday. So knowing our high time frame is so important because we're trading intraday based on where that drawn liquidity is. So after Wednesday, Tuesday, Wednesday, we really just shorted. And this happened overnight, I think in one move too. So let's look at the week that we traded this. Where did that start? True week open is right here, is the new weekly opening gap right here. So for this month, oh, that's a standard div, that's not an OT. So for this month, the monthly cycle created daily for value gap, the first gap that we got in such a long time. We had clean displacement down, daily for value gap, traded into, and then continuing down. So now we're getting some movement. We're getting real movement that is abiding by not just order blocks. And because right here, if we look on the day, look at this. This is just nasty. Order blocks are hardly being held, and they're probably just fractal, even looking worse on the 6-hour and 4-hour. So what am I looking for direction on the daily time frame? Really, I don't use the week. The daily time frame gaps are what really send us in a direction. So right here on this low, when we pivoted over in our first quarter, how much time is that after our literal low of the year? That's 3 days. 3 days from the low of the year is when we had our manipulation move, and we had our 4-hour, remember this exactly, we had 4-hour SMT, we had a 3-month SMTF with YM that I can pull up. So when you break this down by month by month, and I'm telling you, do this at the end of each week, you should be doing this. You should be marking out the highs and lows of each quarter for each week of the month and looking how close and what kind of structure, what kind of market maker models we're creating close to the end of each quarter, because that is going to set you up for the next quarter, the next month, which is going to help you chart the next week for drawn liquidities, which is going to help you intraday because our weekly targets are really where intraday is drawing towards. Whether it's manipulating opposing to that, giving us a better draw for the opposing direction, or if it's just going straight to it. and really not creating much of a manipulation at all, which doesn't happen often, but we can have very quick manipulations that transition immediately into distribution, like we saw in this quarter, right? Quick manipulation in the fractal time frame, even though this was accumulation. We had a quick manipulation, very quickly pivoted off that low, and then you know how the all-time high run was. So right now I'm expecting lower prices to discount of the range, which is right here, and that discount of the range also happens to be where we had a sweep, this high time frame sweep. So that is my current target at the moment. And look at how simple this really was. Even though this was a really bad accumulation, this is the 4-hour candle, and this, or 4-hour chart, and these candles are sloppy in a range, not giving us great price action to trade intraday. Of course, there's opportunity, but there's also less probable opportunity. So looking at it from a higher time frame perspective and doing that each week to set yourself up for the next week is really where I'm finding my edge and where I'm able to, for one, invest into higher time frame positions, just for if you're wanting to buy at QQQ, whether you're wanting to short it, whether you're doing option positions. This is a very, very good way to get a higher time frame analysis for long-term investing, or whether you're just setting yourself up for a draw on liquidity or a bias for a higher time frame to be hit in previous or next months and all that. So I did mention that we would be turning over in mid-July. I mentioned this probably when we were in the middle of all-time highs. I mentioned that we would be turning over in mid-July, and the reason is because I just assume that we're going to retrace into the range. Of course we're going to retrace into the range. There's no way we're going to come down, at least not to 50%, and then before we move up. That's how our OTE works. That's how our premium discount works. That is how the market moves. So do not be fearful of missing out. At the right time, there's going to be a discount in the market for everyone to buy. That's where the banks buy. That's where literally everyone buys that has been in the market long enough to understand that there's fear, and when there's fear in the market, that's when's the best time to buy, because everything's at a discount. That gave me another confirmation that we were moving lower in the next week. We had a weekly cycle, bearish weekly cycle as well, between 2 days in our previous week. We're in the daily fair value gap, in a bearish confluence after we had an expansion lower, taking out monthly sell side low. We're going to retrace into the range from our high, correct? Retrace into the range from our high. We barely got above CE. The only confluence we had, we didn't even need to come up here because ES did that for us, coming into more of a premium from the OT. But all we needed was that high time frame gap above discount, or sorry, in premium. If we're long, it would be in discount, which would be the inverse of this. But that's all we needed. We had a daily fair value gap, a very high time frame confluence that we haven't gotten in a while, with a good displacement lower. So what did that tell me? That told me that this weekly cycle was a great Kraken correlation, or SSMT, that we needed to send us lower. Another true week opening that, we moved in the opposite direction, created that SSMT, and then we're hitting our true draw on liquidity, which is what it was the previous month low, and our manipulation low. That's true quarter open. And our previous true quarter open was right here in April. In April, right after our draw on liquidity, discount draw on liquidity was hit, sorry. So my target is lower. This is just basic information on reading price action on a higher time frame. I'm telling you, the annual calendar, the yearly quarters, and the monthly quarters are so important for intraday trading. It is something that you really don't consider until you get later into the year and you get more data. But from the beginning, those new quarters of the year, of the month, each quarter of the month, especially for intraday trading, should be looked at consistently before the week starts on Sunday or Monday morning. I prefer Sunday, but keep in mind, this is how you will be in the correct direction, high time frame, either for your long-term investments or for your short-term positions. You want to be in the direction of the highest time frame draws on liquidity, because that's when you have the most low resistance moves. And a lot of them happened in Asia, I'll be so honest. A lot of them were AMDX and an early distribution in Asia. that's just unfortunate market conditions, and it's pretty unfortunate at the moment looking at the range. So that's all I'm going to leave you with. I hope that this month treats us all well. I'm praying that we get some good price action, some good intraday low resistance price action, and that we will all grow together with our analysis, with our executions, with our precision, and with our risk management so that we can all scale and I at least give you some value out of my mistakes. So until tomorrow, we're going to be on the charts, and I will see you in the next video. Take care.